Yo, Bitcoin Bulletin fam, get ready, because the crypto universe is absolutely exploding with news. First up, are XRP bulls right to challenge Bitcoin's dominance. We're diving deep into why some investors are looking past BTC for the next big thing in digital finance. Next, the IMF is stepping in with some serious questions for El Salvador's President Nayib Bukele about his government's Bitcoin purchases. Are the buys real, or is something else going on behind the scenes? We've got the inside scoop. Then, we're talking about a potential parabolic rally for Bitcoin. With tight supply and ETF flows, analysts are predicting massive gains. What signals should you be watching to catch this explosive move? And finally, we head to South Africa, where a major firm is making a bold move, betting on Bitcoin as a powerful weapon against inflation and currency devaluation. You don't want to miss this. Hit that subscribe button, ring the notification bell, and let us know your thoughts in the comments. Forget Bitcoin for XRP, the bulls say yes. Many investors flock to Bitcoin as the default digital asset, but a growing chorus of XRP bulls are making a compelling case that it's time to look elsewhere. They believe XRP, powered by Ripple's technology, is poised for mass adoption and could offer superior returns, citing its nearly 1,000% surge over the past 5 years as evidence. The core argument: as banks increasingly adopt Ripple's blockchain for faster, cheaper cross-border payments, the demand for XRP is expected to skyrocket. Why settle for Bitcoin when you could own the cryptocurrency powering the future of global banking? The investment thesis hinges on the idea that widespread adoption of Ripple's technology by financial institutions will directly translate to increased demand for its native token, XRP. RippleNet, the company's flagship product, already provides significant time and cost savings for banks without requiring them to hold XRP. However, a key exception arises for banks facing liquidity challenges, who can leverage Ripple's on-demand liquidity (ODL) service. This service utilizes XRP as a bridge asset for international transfers, eliminating the need for pre-funded accounts in foreign currencies and representing the scenario where XRP's value proposition truly shines for investors. Despite the bullish outlook, a critical flaw emerges. Most major financial institutions, while seeking efficiency, are hesitant to embrace the volatility associated with holding an asset like XRP. The risk of a 20% price drop in a single day is often deemed unacceptable, leading banks to opt for Ripple's technological benefits without the associated crypto risk. Furthermore, Ripple's recent acquisition of a stablecoin payment platform signals a strategic pivot towards stablecoins, which can also serve as bridge assets with reduced volatility. This move, while potentially lucrative for Ripple, could inadvertently hinder XRP adoption. The narrative surrounding XRP's nearly $180 billion market cap may reflect investor enthusiasm more than intrinsic value, with many believing it to be significantly overvalued. While XRP might see short to medium-term gains, the long-term reality suggests a potential deflation of its value. Bitcoin, on the other hand, offers a proven track record as a store of value and genuine institutional adoption, making it the superior choice for fundamental investors. Don't go anywhere, because the story of El Salvador's Bitcoin buys is even crazier. And get ready for a potential Bitcoin rally that could change everything. IMF versus El Salvador, the Bitcoin buyback mystery. El Salvador's President Nayib Bukele has become a darling among Bitcoin advocates for his bold embrace of the cryptocurrency. He famously declared a plan to buy 1 Bitcoin every day, a move that translates to over $114,000 daily at current prices. Recently, he even announced a purchase of 21 BTC to commemorate the 4th anniversary of El Salvador's Bitcoin law, adding another $2.3 million to the nation's reserves, now reportedly exceeding $700 million. However, the International Monetary Fund, IMF, has thrown a wrench into this narrative. Under a development grant agreement inked in December 2024, El Salvador was compelled to scale back its Bitcoin activities. Now, the IMF asserts that Bukele's recent buy announcements are misleading. Mira Louie, an IMF communications officer, confirmed to Bitcoin Bulletin via email that the total amount of government-owned Bitcoin has not increased, and the apparent growth in the Bitcoin Reserve Fund is merely a result of internal wallet movements. The IMF declined to elaborate further. This raises a crucial question. If the IMF states that no new Bitcoin is being purchased, why does President Bukele continue to announce fresh acquisitions? And how is El Salvador's Bitcoin reserve consistently growing by approximately 1 BTC per day, as on-chain data suggests? The Salvadoran government's communications department maintains that the president is indeed still buying Bitcoin, but has offered no further clarification. On-chain data, meticulously tracked by analytics firm Arkham, shows El Salvador's consolidated Bitcoin wallets receiving daily deposits from major exchanges like Binance and Bitfinex, alongside other miscellaneous addresses. This activity suggests ongoing additions to the reserve. But are these truly new purchases? Perhaps, but maybe not. Prior to the establishment of transparent government wallets, El Salvador's Bitcoin acquisitions were largely unverified, often announced via Bukele's personal tweets with a characteristic flair for the dramatic. It's plausible that Bitcoin accumulated prior to the IMF agreement, perhaps through taxes or payments to state entities, is now being transferred to these publicly visible wallets. Crypto analytics firm Bubble Maps suggests it's impossible to definitively determine the purchase date of the Bitcoin currently being transferred. The BTC could have been acquired long before the IMF deal and held dormant in exchange accounts before appearing in the disclosed wallets. Furthermore, Bubble Maps indicates that transactions routed through exchanges could create the illusion of new purchases, a scenario that cannot be verified without the exchanges releasing their internal transaction ledgers. James Bosworth, founder and CEO of Hexagon, a risk analysis consultancy, stressed the need for greater transparency from the outset. He theorizes that Bukele might be engaging in a form of government-backed wash trade, moving funds and coins internally rather than purchasing them on the open market. Bosworth criticized Bukele's unprofessional management of cryptocurrency, arguing it obscures the nation's budget and treats public resources as personal trading assets. Major exchanges like Binance, Bitfinex, and Coinbase have declined to comment on El Salvador's transactions. Despite pressure from the IMF, Bukele remains defiant, stating on X in March that the Bitcoin buys are not stopping and quoting, "If it didn't stop when the world ostracized us and most Bitcoiners abandoned us, it won't stop now, and it won't stop in the future." But is El Salvador's situation just a sideshow? We're about to reveal what could send Bitcoin prices soaring to new heights. And then, a surprising bet on Bitcoin from across the globe. Bitcoin's parabolic surge, the $200K prediction is here. Get ready, because the signs are pointing towards a massive Bitcoin rally, potentially pushing prices well over $200,000. Despite the narrative that this time is different due to institutional adoption and ETFs, the fundamental drivers of market cycles, greed and fear, remain potent forces. Even with dampened volatility compared to previous cycles, Bitcoin's climb from $15,000 to over $120,000 is nothing short of remarkable, and it's achieved this without the deep, prolonged drawdowns seen in the past. The idea that sophisticated investors are immune to market psychology is a myth. Research, including studies from the London School of Economics, suggests that professional capital can actually accelerate bubbles by chasing momentum and amplifying price swings. Historical events like the 2008 housing crisis and the dot-com bust were largely institution-driven. Similarly, current ETF flows demonstrate that even smart money engages in herd behavior and trend following, with periods of net outflows often coinciding with local market bottoms. Consider the explosive growth of gold, whose market cap has surged by over $10 trillion since January 2024. Even a fraction of that capital flowing into Bitcoin, with its significantly smaller market cap and tight supply, could trigger an outsized reaction. With roughly 77% of BTC held by long-term holders, only about 20–25% of the supply is readily liquid. This scarcity suggests a conservative money multiplier of 4x, meaning a $500 billion inflow, just 5% of gold's recent expansion, could potentially add $2 trillion to Bitcoin's market cap, driving prices past $220,000. Furthermore, Bitcoin itself has already exhibited parabolic behavior within this cycle, with multiple 60-100% plus runs occurring in under 100 days since the 2022 bottom. Overlaying these patterns onto current price action paints a vivid picture of how Bitcoin could realistically reach $180,000 to $220,000 before the year concludes. The narrative that institutional adoption has eliminated the possibility of parabolic blow-off tops underestimates both Bitcoin's unique supply-demand mechanics and the enduring power of human psychology in financial markets. But what if the next big move for Bitcoin isn't just about price, but about survival? We're heading to South Africa to uncover a bold new strategy. South Africa bets on Bitcoin to conquer inflation. In a bold move to combat rampant inflation and currency devaluation, a South African firm, Africa Bitcoin Corporation, ABC, formerly Altvest Capital, is planning to raise $210 million to establish a significant Bitcoin reserve. This initiative positions Bitcoin not just as an investment, but as a critical tool for economic stability on the African continent. Executives at ABC view Bitcoin as a vital solution to pressing issues where traditional financial services falter. Chairman Stafford Macy emphasized the life-saving potential of Bitcoin in regions where financial dysfunction leads to dire consequences. By embracing Bitcoin, ABC aims to strengthen its balance sheet and develop innovative financial products, such as lending, to support entrepreneurs and small businesses struggling with the dysfunction of global capital markets. Macy highlighted that in developing nations, Bitcoin's value extends beyond an alternative investment asset. It serves as a crucial medium of exchange and a reliable store of value. Macy articulated a powerful perspective. In Africa, when financial services don't work, people die. We live that reality. So when we approach Bitcoin from a real human necessity, life-saving perspective. He further posited that issues like corruption and political instability are symptoms of monetary dysfunction, stating, "Society is not broken, money is." Rising food prices reflect currency weakness, not economic weakness. ABC has already raised 11 million rand, $633,000, and aims to collect a total of $11 million in its initial phase. This move aligns with a broader trend of corporate Bitcoin treasury adoption, with public companies currently managing over 964,000 BTC, valued at more than $110 billion. While purchase volumes have recently seen a dip, the strategic intent behind ABC's reserve is clear: to leverage Bitcoin's unique properties to foster economic resilience and growth in Africa. And that's a wrap on today's explosive Bitcoin Bulletin. But before you go, stick around for a super fast recap of everything we covered. What a ride! We saw XRP bulls challenging Bitcoin's throne, the IMF questioning El Salvador's massive BTC buys, and the electrifying possibility of a parabolic Bitcoin rally hitting $200K. Plus, South Africa is embracing Bitcoin to fight inflation. Don't miss out on the next big crypto moves. Smash that like button, subscribe to Bitcoin Bulletin, ring the notification bell, drop your comments below, and follow us on all social platforms for real-time updates.